Hello everyone, happy Wednesday. Thank you for waiting. Another edition of hashtag askrobco this week, as always, with James Wild. Hope you're well, James.
Yeah, really good. Thanks, Rob. How about yourself?
Yeah, really good. Lots to discuss today. Obviously, last week we went live with the budget, and literally it was live because the announcements that affected our market and property and the wider economy came through literally 10 minutes before we came onto the show, and we super fast went through some of the headline information. Today we can now discuss that, having digested that information and also having seen literally the reaction on the market straight away, and it has been pretty fascinating. As always, before we do a review of that, James, let's just look at the headline data for the last week, because I think it's so pertinent and it's so interesting the direction that the market is going at the moment and has been going for the whole year. And I do feel it's the place that we should really start. So if we get that headline data up, it's in your handouts on the right hand side. Let's just focus on week 9, 8th of March. Okay, different format here, so I've got to get used to this. So basically the numbers for week 9 have shown us that the properties coming on the market have reached a record high this week. So it's the highest volume of new instructions for the year. And we've seen that really slowly increase by 10% throughout each week through the year. And now we've reached the highest amount. Now, that's not going to be a peak. Why? Because I'm speaking to all of the agents, and with lockdown, I suppose the school's going back on Monday, just gone, lockdown semi-ending on the 28th of March, and even more ending on April the 12th, with shops and high streets semi-reopening. But what we're seeing now is that now the schools have gone back, people have got more time on their hands to start thinking about putting their house on the market. So that number that's come through this week, which is the highest sales new instructions of the year, that's only going to go up now, and on the back of the announcements last week in the budget, with the stamp duty window being extended for a further 3 months and a further 6 months if you're looking at the 250 bracket. So we've seen it climb every week. I've been telling you every week, I believe that's going to get stronger and stronger, more instructions, and I think March and April you're going to see really strong volume of instructions coming onto the market. Now, if we have a look at the sales data, that's dropped off slightly this week. Nothing dramatic. It's still above 200, but it's not near the levels that we were seeing at the back end of November and December of last year. What I expect to see now is, with the reduced stock coming onto the market, the increased stock coming onto the market, the increased activity that the agents are now telling us that there's a bit of a time lag, obviously, for that deal flow to funnel through, but we've still got the time lag of the deals last year. I believe that throughout March and April, and maybe, peaking in May and June, with that 3-month part of the window, we're going to see really strong sales figures. I think that's the 2 key messages now, that we're going to get month after month, strong new instructions, lots of under offers, obviously, and strong sales figures, because the market is going to continue to be buoyant, because that's the direction the government is heading this economy. James, on those 2 points, just to have some clarity on that.
Yeah, thank you, Rob. And just in terms of the data we brought through to you this week, a new graph, which I think helps to obviously graphically highlights some of the trends that we've gone through over the last 9 to 12 months. And obviously, I think the main standout thing is the new instruction levels, which were we can see the peaks of those in Q4 2020 as the markets were fully open and on the back of the stamp duty holiday on the first 500,000. As we're moving out of the lockdown 3.0 in the coming weeks, we're already seeing the new instruction levels just spiking since the start of the year, with also positive sales data, with again this week over 200 sold properties here in London. So sort of more positivity, and that gentle momentum which we've seen since the start of the year is still on an upward curve. How sharply that will rise come April, when lockdown measures do continue to ease through to that June period, that's going to be a crucial period, I think, for the residential property market here, and also for the retail office markets, as initiatives of back to work take place, non-essential shops reopen, whilst also with that, obviously, big day this week on Monday, the 8th of March, with obviously the return to school for many children across the UK. The trends like this often coincide with the enhanced levels of activity in the UK property market. So on the back of that, it would be interesting to see, certainly this week, there could be just an increased spike in those agency inquiries, people viewing properties, and just that increased sentiment in the market.
Thanks, James. Let's just go through the headline information from the budget last week. Let's have a discussion around that in terms of how we have already seen it affect the market in line with what we've just discussed. And then we're going to move on to the latest announcement on cladding, everyone's favorite subject, and it's, you know, the train that just keeps on going and going and going and going, and we all pray that it comes to an end eventually, and well, we're going to have an update on that. So let's quick review of the budget and where we see that affecting the market over and beyond what we've just said. And then we're going to cladding, which very important update on cladding from the RICS this week.
Yeah, thank you, Rob. So last week's budget, as we brought it to you live, within 20 minutes of 15 minutes of some of the announcements, we'll bring it to you live. So we were very sort of reactive last week. Now I've had a chance to digest it a little bit more. There wasn't too many massive surprises in the budget. Obviously, the furlough scheme was extended, with the sort of highly anticipated change or extension of the stamp duty holiday for a further 3 months through to the end of June for the first 500,000. This was highly anticipated by the market. There is a further 3 months on top of that from the end of June to the end of September for the first 250,000 of stamp duty relief. The Chancellor is very much wanting to gradually ease things into normality again, and he talks a lot about the sort of cliff edge of these these tax breaks and incentives, and he's very much sort of trying to smooth the gradient into these back to normality, which I think is a very sensible approach. So some positivity there for the residential market. In terms of the other built environment sectors, office space, retail, high street, there is the 5 billion rescue fund for the high streets, which I think is a very, very welcome initiative. This comes in the form of some grants, also some business rate holidays, certainly until the end of June, with the remainder of the year having discounted rates, which is obviously massive for the high street. The Chancellor obviously wants to make those stores reopening, and possibly new stores opening where, you know, there are some voids in the high streets we're seeing on nearly all high streets, just easing that pathway through to reopening the stores. Furthermore, in terms of residential sector, the government's set to announce its first time buyer initiative for 5% deposit mortgages, 95% mortgages, up to £600,000. This is obviously a massive step for first-time buyers and will sit alongside the Help to Buy scheme, which runs until March 2023, having been recently extended.
James, do we have further clarity on the entry point for getting those 95% mortgages yet? Do we have the detail behind that yet?
There's limited detail at the moment, but what we've been told so far is that the initiative is due to involve some removing of the stress testing for the mortgage applicants. And the sort of real nitty-gritty of what that means is still it's still sort of making its way through to us, filtering its way through. It does bring some concerns over the sort of sustainability of this lending in the sort of short to medium term, and what position those people will be in to repay those loans. So whilst there's some removing of the stress testing for the mortgage applicants, the affordability criteria, we're yet to have sort of firm details of those, on how those will be appraised. We do note that a lot of the sort of major high street banks are on board with this new product, which is obviously a key measure that there will be availability to those consumers, to those first-time buyers who want to take up the opportunity to acquire their first home on this scheme.
I think that's really important, because last week we got told live in the budget that that was being supported by NatWest, by Barclays, by HSBC, by Lloyds, by Virgin Money. That, as I said, that the top 5 banks and lenders in the country from a national residential perspective. So they've obviously secured that backing, and that's literally the majority of the what we would call retail lending market for the residential space, not including Nationwide, which is a building society, so it doesn't come under the banks. We've got to be always clear on that one. So sorry to interrupt you, I just think it's really important that literally the major lenders are backing that scheme.
Yeah, it's one which is going to be at the forefront for first-time buyers. I think obviously with the cash deposits being the major hurdle for most first-time buyers, this is going to be an incredibly welcome step by that sector of the market to really sort of open up the opportunity. And like Boris said, we keep saying the generation rent moving through to generation buy, and also further supplementing the market. As we mentioned, the Help to Buy scheme did get extended a couple of months ago to March 2023, which will further supplement the market and enable those buyers who aren't or may not be eligible for this initiative. They have a separate initiative. So like I've mentioned previously, there's not a sort of cliff edge of eligibility. It's very sort of smoothed into the market, and the Chancellor has obviously tried to make these incentives and initiatives a sliding scale, covering as much of the market as possible.
Great. So just to wrap up the budget and how we see things moving forward before we go on to cladding and that really important update, residentially speaking, the market is now going to be fueled by the 95% mortgages, by the extension of the stamp duty window holiday, which is 3 months up until 500,000, 6 months up until 250,000. That's really going to fuel the market. The continued, I would say, cheap debt, low debt interest rate environment will fuel the rest of the market. And so you're just going to see that's, distribution from a 250 property to a 500 property to a million property to 2 million to 3 million to 5 million to 10 million. That whole redistribution of wealth and funds within the market is going to be fluid, and there's going to be lots and lots of volume for the remainder of the year. But 6 to 9 months is going to be very, very positive with lots of activity, and for sure the demand will outweigh the supply in that period of time. Then we're going to have to regroup at the back end of the year when we get to October, November, December, and start seeing, now that the window's out the way, is the market carrying on, and are the 95% mortgages and the Help to Buy continuously fueling the market into 2022. So residentially, I think it's very clear, whether you're doing private banking, whether you're doing bespoke lending, whether you're doing prime, super prime, whether you're doing national-wide coverage from the very bottom to the very top of the market, there's going to be lots of transactions, it's going to be lots of volume, lots of activity and good sentiment and positivity within that space. That's what the government want to fuel and drive, and that's what is going to be happening in the market. Now, moving to the high street and retail and all the nuances behind that, that market has been very challenged anyway for the last 12 months through lockdown. Now it's going to reopen, hopefully COVID-free and pandemic-free, and slowly but surely all those markets are going to strengthen this year. Some of the dynamics will change. The office market could change, the high street market. Obviously, there's been some losers in the marketplace. We've lost a lot of that high street retail presence, so that's going to have to reinvent itself in some way, shape or form. That's going to be interesting to see. But commercially speaking, from a lending perspective, whether you're doing your short-term bridging or your challenger bank lending, that market's going to reopen. And every month now, March, April, May, June, July, the whole of the year, commercial lending will get stronger and stronger and stronger. And then we'll see whether the students all return to the universities and the student accommodation, and that void comes back, etc., etc., etc. So I think mostly positive from the budget. I've been saying for months, my belief is that this government policy is to get themselves out of the position that they're in financially because of COVID through driving the property market. And that's clearly what they've demonstrated in the budget, and that's clearly what they're going to be doing. Let's flip now to cladding update. Really important for all the lenders out there. What's the latest this week from the RS?
Well, just one additional point, sorry, Rob, on stamp duty from the budget last week. There is also the 2% surcharge for non-UK resident buyers, which I know will be a particularly prevalent point for those clients on the line who are offering finance for international purchasers, and how the market will adapt to that. I know a lot of international non-UK resident buyers are mainly focused on prime central London, so a little change coming in from April 2021 next month, as we'll see a reaction to that coming through the summer. But moving into cladding and EWS1 forms, there was an update last week from the RICS, which was issued as a guidance note, which was entitled Valuation of Properties in Multi-Storey, Multi-Occupancy Residential Buildings with Cladding. Now, this guidance note seeks to underline further clarity for surveyors and valuers who are undertaking surveys on residential property in blocks of, well, any story. We're going to have a quick coverage of them all. But as a result of the consultation, the new guidance, as they say, makes clear to the valuer or the lender where they can establish the building owner has met the advice consolidated in the guidance note. An EWS1 form should not be required, nor would an EWS1 form be required for buildings over 18 metres as a valid building control certificate in place. Now, this is quite a key change, but the building control certificate has to be in accordance with the building amendment regulations from 2018. Now, a slight nuance to this is that not all buildings which completed after 2018 will necessarily be in line with those certificates, as obviously the construction timescales for a lot of these buildings is 2 to 3 years for some of the tower blocks. So obviously, whilst the cladding was being installed, there's various stages to the building control sign-off. So something to be aware of then, but it is a move to create further clarity in this sector. For buildings which are over 6 stories, the EWS1 form will be required where there is cladding or curtain wall glazing to a building. This will include some balconies which also stack vertically above one another with either balustrades and decking which are constructed of combustible materials. Some of these will be easier to spot than others in terms of those which are timber, ACM, MCM, HPL. We'll go on to some of those acronyms shortly. But again, surveyors and valuers need to be very vigilant, just not only of the subject flat, but also in terms of the building as a whole, what units it comprises in the relevant block. Is there a balcony? What materials are used in the cladding? This includes the balconies, which are obviously an external amenity space. So like always, lots of vigilance is needed there. Lenders may want to insist upon photographs of all elevations of the buildings. They have a clear picture of the building itself. They can get a feel for what it is they're lending on, if it's a building which might be unfamiliar to them, if they haven't got any lens on that building as existing. Furthermore, in terms of buildings which are 5 or 6 stories, this will require an EWS1 form where there is a significant amount of cladding on the building, and this is where there is any ACM, MCM, HPL. So ACM, a very key term here, aluminium composite material, ACM. Another commonly used material as well is other metal composites, MCM, metal composite material. The other type of cladding used, which is often, well, is never reaching the threshold for fire safety, is HPL, high pressure laminate. This is one of the easier cladding materials to spot, and if anyone wants any further guidance on this, they want any photographs, they can contact us and we'd be happy to
yeah, I think, James, we're going to share the guidance with everyone after this, so they've got it. And I suppose the big question is, those people that are trapped in properties stroke mortgages that are now not mortgageable, does the latest guidance release people from that, or do we still have that conundrum?
It doesn't release people from that. The government and the RICS, their data on this is that 500,000 extra people will be able to now proceed without an EWS1 form for mortgage lending. So that's their figures, and obviously it's positive that an extra, say, 500,000 individuals, I'm not sure about across how many blocks, but they will obviously have a smoother process now to obtaining mortgage finance. It obviously creates a bit more clarity as to where an EWS1 form is needed, which I think is what we needed. It's still only in the form of a guidance note, not an information paper. I'd want to see a bit more detail in here for the valuers to follow. It's a little bit, I still believe it's a little bit vague in places. I'm not sure if there's such regular updates with cladding and EWS1 from the RICS and obviously government commentary. Hopefully there'll be some more further information coming out of the RICS in the coming months.
Brilliant. Thanks for that update, James. We will make sure everyone gets that as well. I think, unless there's any other news, James, is that everything for this week? Anything outside of that cladding and budget?
That's everything from me.
Brilliant. Thank you so much, everyone. Thank you for listening. Thank you for following. Thank you for your questions. Thank you for your updates. Thank you for supporting us on all the platforms. Any further data, intel, information, questions, queries, updates you want, we will bring it to you. Let us know, and we will ensure that we bring it to you on this platform. We will be here at the same time, same place next week, every Wednesday, 1 p.m. #askrobco. Stay safe, stay well, and we will see you all next week. Thanks, James.
Thanks very much, everyone.